Hey, what's going on, everybody? My dog waited for me to hit the go button, start barking. Give me just 1 second. I'm gonna go figure out what's got her all upset. What? You have to relax. It's time for work. Okay? It's time for work. No barking. You can bring all your toys in. All right, greetings and salutations, everybody. Erla, Rob, Paul, good to see you. Um, True story, guys. I had dreams last night about trading. I had dreams about having to be patient and wait for an entry. Good morning, Muser. And it was funny. It was weird that I'd have dreams like that. So I guess that's just what my focus is this week is waiting for rules to be met. Guys, I'm excited to be here today. I'm excited to see a lot of you new users coming back to hang out with me again. You folks that are just now getting into that learning the software, feeling like, all right, I'm going to do this. This looks like fun. Let's see what we can do. Iron Mike, welcome to the room. I know we had a couple different new people testing over the weekend. The Rat, hopefully we see you here today. It's your boy Pooker. Hopefully you're in here today too. Great to have you guys. Just a little introduction. My name is Mark. I've been teaching the room for about 3.5 years now, guys. No, I've been teaching it for about 3 years. I've been with the software for about 3.5 years. Um, I am John Novak's younger brother. More hair, better looking, all that good stuff, but still younger. Um, and I want to tell you, so I came to the software when I had had my second spine fusion that pulled me out of my career, and my brother said, "All right, man, it's time to learn how to day trade." And when he did, I did everything wrong. Everything wrong. Everything that he told me that I could do to be successful, I chose not to do. Everything that he said would make it easy, I made it difficult. Everything that he said was the fastest path, I fought it tooth and nail, guys. I'm kind of an egomaniac, I suppose. I don't know. And I made it really, really hard on myself. And what I did is about 3 or 4 months in, COVID was actually going on. I said, man, you should let me teach a 101 class. You should let me teach a class to simplify things. All the things that I thought were supposed to be obvious were not. All the entries that I thought were supposed to be second nature were not. Everything that I was watching other people do, I couldn't do because I fought the process very hard. So this class is very much designed to keep you guys from fighting the process, to get you guys focused on the best of the best, to get you to your trading goals and the path of least resistance. And that's exactly what the class does every day, guys. I try to break it down into its most simple form, the most basic approach to learning how to read your indicators. And then from there, once you're comfortable with that skill set, everything kind of pays dividends. So new users, we're going to take the first hour class and we're going to talk about the easiest trade that Nexgen teaches, the one that teaches you to read your indicators. What is that? The room, Rob? Can everybody hear me? Hey, Gerard. Yep. Okay, you guys can hear me. Cool. I'm not sure. Rob, can you hear me? Guys, sometimes Discord messes with you. Just reboot if that's the challenge. We're going to focus on a high probability trend trade. So every day, and I'm telling you guys, broken record, I talk about one trade that uses two charts that has three advantages, and it teaches you everything you need to know to use this software successfully. I don't withhold from you. I give you everything that you need. I'm even going to teach you how to study it and give you all the tools that you need to study it. Nexgen, in my opinion, is the greatest software on the planet, guys. You're not going to find anything better. And if you do, I want you to let me know. I'll make my brother buy me a copy. But just like anything, your software is a tool. Your software is like the greatest hammer ever, or a bandsaw, or whatever. And if you don't learn how to use it, it's not going to seem as effective as you thought that it was supposed to be. It's like just full disclosure, I stink at golf. I'm not good at it. I want to be good at it, but I'm not good at it. And I can throw all the money in the world at clubs and balls and head covers and rangefinders. But if I don't learn the basic mechanics, I'm never going to be successful with that game. So trading is very similar. There's a lot of parallels. But one of the things that I do every day, and we're going to do this right now, guys, is we look at news, is we make sure that there's not some crazy um, releases coming out. And when I say crazy releases, not so much what they're talking about, but rather the fact that they're high impact, these red boxes. Today's Monday, May 13th, and everything is low impact. We got a couple FOMC peeps talking right about now. Good morning, Zorro. Mortgage delinquencies is tentative, but there's not a lot of news. Tomorrow, when we see these high impact news, that's going to be a big sign for me to say, hey, you know what? Don't get in front of the market. The market may go crazy, guys. And I check this every morning, and I just dropped the link in there for you. Everything that I talk about, each and every rule, the looks, the meanings, the definitions, how to use NinjaTrader, I mean, everything is right here on the education page, guys. Software user guide is your NinjaTrader how-to. The most important one that I want you guys on board with is taking pictures and sharing pictures. Learning how to do this is going to expedite the education process for you. And then straight from the tutorial section, I don't know what EMI is. It's an old Sex Pistols song. Do I look at EMI on Wednesdays? Empire State Manufacturing Index? It's high impact. So Sergio, let me tell you how I feel about news. And we'll do it in pictures because I think this is a big deal. Guys, I'm not that smart. I don't care what core PPI is. I don't research it. I don't look at it. I don't call my broker and say, hey, talk to me about core PPI and the impact that it may have on the markets. The only way that I look at news, ladies and gentlemen, and this is, I think, the easiest way to do it. Give me 1 second, guys. There we go. There's Rob's answer. Is I look to see if there's red or orange boxes. And if there's red boxes, Sergio, I know that somebody, like maybe Sergio's waiting to hear about the Empire State Manufacturing, right? Maybe Bob with $1 billion is waiting. And I think of news in the way, if you guys remember Trading Places with Eddie Murphy and Dan Aykroyd, they were waiting for the crop reports, right? And when the crop reports came out, everybody had a decision waiting. So the only way that I use news is to stay out of the way of that decision, Sergio, because once the decision is made, it doesn't matter to me if it's up or down, if the market rockets up, I know, right? The OJ market, or whether it goes down, because guys, we're futures traders. We'll make money both directions. So it's easier to sidestep their reaction. And then once you sidestep their reaction, you just wait for your rules to be met. So I don't trade what news says. I don't ever click on this box and see. I don't worry about what the actual, I don't care what the forecasters say may happen if. I just wait for it to settle down and then I start trading again. So, but I want to know where it is because tomorrow at 8:29, I don't want to be entering a trade because I know that 8:30 that market may go just apeshit crazy. So that's how I use news. And then guys, this is the tutorial section. Everything that I talk about comes from the tutorial section. I'm going to go to the glossary of common terms and I'm going to give two definitions right off the get-go, guys. The first one is high probability trend trade. The high probability trade, it's defined when each indicator on every chart agrees with the rules for the trade. Awesome, Rob. I'm glad you got in. This is when triggers are their strongest. This is when no termination conditions exist. This is when there's no trouble spots between you and your entry target. And guys, this is the best of the best trade. This is the trade that I talk about for an hour as a high probability trend trade when everything is in your favor. And I do that for a reason. First and foremost, guys, I talk about the high probability trend trade, and I brought this picture up. I want to remind you that you're not in charge. The large crowd is in charge, guys. We're like these small fish in a big sea. So the high probability trend trade teaches you to embrace what the people in charge are doing, rather than fight. And that's exactly why we focus on this one. The high probability trend trade, as we teach it, is a trade that typically wins 70 to 80% of the time. That success creates confidence. The high probability trend trade is a trade that teaches you to recognize advantages in the market so that you can take that recognition and find other opportunities. And basically, what that is saying is the high probability trend trade, it teaches you to read your indicators. It turns you into a chart reader. And I'm telling you right now that once you focus on the read rather than the money, how do you don't? This site has nothing to do, Paul, with anything on NinjaTrader. This is just the Nexgen website. That's all it is. This is just the nexgent3.com education. Has absolutely nothing to do with NinjaTrader. Um, this is our homepage. This is our website. Becoming a chart reader, guys. This is the goal. Not to be a profitable trader, not to make the most money, not to catch every move in the market, but rather be able to look at the market and understand three very simple concepts: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And once you understand these three things, you can use that likely to continue for entries for the high probability trend trade. And you can use that likely to go spot to take targets at key Fibonacci areas, and you can understand this likely to stop area as the point where you shouldn't be taking any more trades, guys. So your chart read is going to be the most important focus in the beginning, and your chart read is going to take you um, not only with that high probability trend trade, but it's going to open doors for what we call a medium probability trade. And a medium probability trade is defined when most of the indicators line up for a trade. However, a small issue exists. Your ability to read your charts will identify that issue. I'm also going to give you a very rock solid plan to take those trades. But when you're executing medium probability trades, you're going to take these trades and you're going to manage these assertively. And your chart reading is going to allow you to do that. And you're going to identify trouble through your chart reading, taking a portion of the position off at trouble, getting to a break even as quick as possible. And what you're going to realize is that while the high probability trend trade is the best of the best, this is the core, this is your foundation, it's going to open the door for a myriad of trades beyond that high probability trend trade. And it's all going to revolve around your ability to read charts. So we're going to go through and we're going to give you guys the path of least resistance to do that. And everything starts with posting your trades in the classroom. Guys, the people that post the most typically make the most. The people that post the most are the people that get to where they want to be the fastest. The people that are constantly dropping pictures in the room and saying, hey, Mark, this was my read. What do you think? Mark, I saw it like this. Am I seeing it right? Mark, this was my entry. Could I have done it better? Mark, this is where I got out. Do you see a better opportunity? And every time you post in the room, guys, I promise you, it's like having a private session with me. It's like you and I just talking one-on-one. And if you posted this in the room, right, you're going to tell me what you see and why you did what you did and how you felt and where you entered and where you exited. And that's going to allow me to give you feedback. My feedback is the second part of getting to where you want to be, guys, because while the pictures are outstanding, NextGen provided you a spreadsheet so that you could record every picture. Good morning, JW. So that you could annotate every chart, so that you could drop them into this spreadsheet that was provided to you. And you've got a tracking sheet. You've got this sheet where every time you take a trade on Simulator Live, it doesn't matter. You're dropping it into this spreadsheet. And everything that you do today, if you really want to get to where you want to be, guys, you're going to come back and study it tomorrow. And when you wake up tomorrow morning, you're going to look at the trades that you took and you're going to say, you know what? What worked? What are the patterns that are working? What are the patterns that help me win more than I lose? What are the patterns that seem to be bringing me success, which is fueling that confidence? And you're also going to ask yourself what didn't work, right? My challenge is trading into those areas likely to stop the market, trading right into termination conditions. And it took this repetition coming back for me to recognize not only that pattern in the market that was causing me harm, but also that pattern in myself, that desire I had to hope areas broke. You're going to find that certain looks keep you relaxed and feel easy, and other ones feel forced and make you nervous. And this little study each and every morning, it will accelerate the learning process. And that is your first tab on the spreadsheet. You've also got a tab dedicated to learning this high probability trend trade and the individual pieces of it. You've got a tab for your favorite looks where you're going to build your trading. And as you study and focus on things, you'll fill this with pictures and make it look like mine. And that's the client trades, guys. This is where I've got about 300 pictures in the green section of you guys absolutely killing it with the software. And I've been loading this thing up for years. Um, the, we've got the entry sequence for longs and shorts for the high probability trend trade, a very beginner management plan for you, an awful lot of management ideas, patterns that repeat themselves, termination conditions. And then when you are a chart reader, if you feel like going to the NASDAQ, there's a whole section hidden back there about the NASDAQ. I would encourage new users to ignore that until you're very, very comfortable with your chart reads. So go through, post everything. I have a question, post it in the room. I saw something, I don't know what it means, post it in the room. Use that spreadsheet to take all those pictures to go back and study them. Good morning, PC. We're going to take the first hour today and we're going to learn the trigger line and Fibonacci rules for when it's okay to trade, guys. I'm going to keep it as simple as I know how. We're going to break it down and we're going to look at it. You guys simulate, practice, get in there, make mistakes, be willing to make mistakes. You're brand new. It's okay to not do everything perfect. And then I'm going to give you a plan. I'm going to hand you a plan, a written plan that not only covers entries, but also management. I'm going to give you the most solid plan, only 2 trades designed to optimize your chances of success. Your job, new users, those of you that are new, is to go through and keep taking pictures. Keep taking pictures until these looks become easy. Because in the beginning, as you begin with me, and I know I've got a lot of new people here, this is your life. Trying to take a sip from the fire hose, guys, it feels overwhelming. It feels like there's a lot coming after you. But I'm going to tell you right now that high probability trend trade is only 3 rules, guys. It's only 3 rules. Each rule provides you an advantage. So we're going to look at it, and we're going to look at it in a 2-chart process, guys. We are going to take 2 charts, a large chart and a small chart. That's it. Large chart on the most current bar, the first bar is going to tell you 66% of everything that you need to know about whether or not it's time to take a trade. Your large chart will define the direction of the market. If the background is green, we're going up. If the background is red, it's going down. Your large chart will define momentum. This is where rule number 1 comes in. And when rule number 1 is true and you have strong trigger lines, you'll have the advantage of momentum. The large chart will also define any and all areas that may be problematic for us. So your large chart leads the way. Have that sewn into a pillow or put on a coffee cup. Tattoo it on your forearm, guys. Large chart leads the way. And then once the large chart with the most current bar says, hey, guess what? You have momentum and your path is clear, you're going to take an x-ray of it on a smaller, faster chart. There's about 30 bars on the small chart for every 1 bar on the large chart, which means that we're going to be able to refine it. And you are going to pinpoint where the market is most likely to continue, so much so that you're going to wait for the market to come to you with a limit order. And by doing so, it's going to increase your profit potential, guys. It's going to reduce your risk dramatically. And rule number 3 is designed to help you pinpoint that best of the best entry. So only 2 charts. Remember, the large chart is a reflection of what the large crowd wants, what the people in charge, the guys with the money. The small crowd is your small chart, and these are the people that fight the large crowd. These are the people that don't have Nexgen, that try to make something happen instead of just going with the flow. We're going to rely on them to pinpoint our entries, and we're going to do this 2-chart process with the 3 rules. Each rule provides an advantage, and a trade isn't your desire for the market to go up or down. It's not your need to pay rent or your want for a new Ferrari. A trade is nothing more than momentum, a clear path, and an entry area. And when you piece these three things together, you are in a high probability trend trade. But the cool thing is that once you can find the entries for this trade, you can look at any chart and decide whether or not the momentum is present. And you can look at any large chart and say, you know what? I do or I do not have a clear path. And my goal and my hope and my wish and my want for you guys is that you begin to speak to yourself in terms of these advantages. I do see momentum, or I don't. I do see a clear path, or there's an area that may be problematic. And once you get these two key concepts, your entries may vary enormously from one another, and you're going to be able to find more and more opportunities. So we're going to start with the large chart, and we're going to start with rule one. Before I get going, are there any questions? We're going to talk about these rules. It's kind of a lecture for about the next 45 minutes. And then the second half of class, guys, is 100% dedicated to you. Ask any question that you have. Post any chart that you want feedback on. We'll cover any concept that you want to cover. And if you have a question about one of the rules or one of the looks that I'm talking about, go ahead and drop your question in the room. It's okay to interrupt me. The interjections in this room, the participation in this room are what make this room so outstanding, because when you're brave enough to ask a question, everybody gets the answer. So strong triggers, guys. In my opinion, strong triggers should lead the way. You have questions in second hour? Cool. I can't wait to see them. When the background is green on the large chart, the market is going up. That's the easiest way to think about it. So in order to have strong triggers in an uptrend, my small triggers, which are these solid lines, and my large triggers, man, my mouse is like super sensitive. My large triggers are these dashed lines. Guys, these are nothing more than moving averages. I don't understand the math that goes into them, but the one thing that I'm absolutely positively sure of is that when my small triggers break above the large triggers, when space is created between the two, when my trigger lines are both green, both wide, angled in the direction of the trend, I have strong triggers. And when I have strong triggers, the odds are favorable for the market to continue up. And odds favorable momentum is the first advantage that I'm going to give myself each and every trade that I look for. In a downtrend, smalls are below the large. Both are wide, both are red, matching the background. The space between the two, I want you to picture scissors opening up, getting ready to cut. It's that gap between the small and the large that lets me know that the odds are favorable for the market to continue down. Odds favorable momentum. You're going to see it written on people's charts in the room. You're going to hear me say, hey, did you have odds favorable momentum? And you're really going to learn to embrace this look, because when you have it in an uptrend, it's the best of the best time to use that smaller, faster chart to buy Fibonacci support to go with that trend, to go with that momentum. It looks like a tail on that slow moving large chart, but you're going to use that refinement chart to pinpoint exactly where this tail is most likely to form. In a downtrend, that's the best of the best time with these strong triggers to sell Fibonacci resistance on that smaller, faster chart. Once again, on that slow moving large chart, it just looks like a tail or a wick. You will be able to pinpoint where that market is most likely to continue, right where that tail is likely to form, by using that smaller, faster chart. So odds favorable momentum pushes the market. Odds favorable momentum can break key areas. Odds favorable momentum, ladies and gentlemen, will even cover some of the mistakes that new users make. Scissors open, the advantage is there. Well, when those scissors close, when the small triggers work their way back inside of the large triggers, guys, we call this a weakening of the large triggers. It is a visual representation that the trend is slowing down, and anything can happen up or down. So I have odds favorable. Everything says giddy up, go to the downside, and when those scissors close, I forfeit my advantage. The advantage of momentum is no longer present. And if you are a gambling person, I hope you're not, because we trade patterns that repeat themselves. Odds favorable versus anything can happen. Embrace the verbiage, guys. One tells you you got a great shot at victory. The other one says, it could go either way. So for the brand new user, guys, day 1 through 30, odds favorable momentum is the key. Odds favorable momentum is the great advantage. Odds favorable momentum is what pushes that market, what breaks those areas, what covers those mistakes. As you grow with the software and you start becoming more of a chart reader, one of the lines goes inside of the large, and you know it's a slowdown. You say to yourself, hey, this is a slowdown, but the rest of my charts line up for this trade. Let me give it a shot. Let me go ahead and manage it assertively if I need to, make sure everything agrees. And then once the small triggers get inside of the large, you know that it's a slowing. You know that anything can happen, and you can actually, believe it or not, make the choice to not take a trade without the advantage of momentum. Or you can make the choice to take the trade, understanding that you'll have to manage that trade very aggressively, and your chart reading is going to allow you to do that. When I get these anything can happen triggers, guys, and I line it up with one of those key Fibonacci areas, these are when the areas are more likely to stop the market. These are when the areas are more likely to hold, to create a bounce, or even a full reversal. So your first rule is 100% designed to get you focused on understanding momentum. And momentum means separation between the small and large. Notice how strong triggers breaks areas. Guys, once you get to the point to where you can recognize this, and let's just take a picture of it. And this is going to be part of your study. New users, we're going to put you to work to be a millionaire. Draw an arrow and say to yourself, small's above large, wide in direction of trend. This is strong triggers. Can you guys give me a Y in the room if you guys are good with this? It's a pretty simple look. It's either strong or it's not. It's either weak. And guys, we're looking from the point of separation until it returns. And I'm telling you right now, momentum is the key, guys. What does strong triggers mean to me? Let's put that on the picture too. It means that I have odds favorable momentum. I love that phrase. It makes me feel good about taking a trade. It means that, what does it mean? It means rule one met, right? Look for longs on smaller chart. So guys, I'm going to take this picture and I'm going to share it to screencast. And I'm going to go to that spreadsheet that I had. I'm going to go to the 101 section and I'm going to drop this strong trigger look in there. Remember that I share these pictures. I share my spreadsheet with you guys every day. I'm breaking down the individual concepts into pictures for you. So make sure that you steal those. Make sure that you take those. And if you scroll back, that was a huge move down. But look, there's strong triggers. And there's those tails, guys. There's those wicks coming down. And there's strong triggers up. And there's strong triggers down. And strong triggers up. And without ever taking a trade, I can back up and I can go take 25 pictures of what it means to have strength to the upside and 25 pictures of what it means to have strength to the downside. And I could make it so I never miss this look. So in my most current bar, my large are up, but my smaller down. The colors don't match. Guess what? I do not have odds favorable momentum. The colors don't match. They both need to be green and wide and angled in the direction of the trend. So that's rule number one, ladies and gentlemen. And that little weak triggers at an area is leading you into rule number two. Rule number two says termination conditions false. What's a termination condition? Well, it's an area that may stop the market, an area that could create a bounce, an area that could become a fight between the people in charge. When your termination conditions are false, when none exist, you're going to have room to your profit targets, guys. And we're going to call that the advantage of a clear path. We already have the advantage of momentum. Let's make sure that there's not a brick wall to drive our car into. So the areas that we're looking for are divergence highs, red resistance, blue support, yellow one-to-ones, divergence lows. Guys, these are just lines on a large chart. Don't overthink it. You don't have to know the math to create fibs. You don't have to understand the formula to establish a one-to-one. The only thing you need to know is that these lines can cause trouble. And you're going to use your trigger lines, the exact same trigger lines that establish momentum, are going to let you know if these areas are likely to stop the market, which means it's a termination condition. You can see how yellow one-to-one stopped at cold, how resistance created the bounce with those weak triggers. You'll understand if they have the potential to break, and you'll also understand if they've broken, if they're no longer a concern to you. And we're going to do this with a pretty simple recipe, guys. The first thing that has to happen is price reaches an area. Why is that? Because decisions are made at key areas is the easiest way to say it. These guys right here with all the money, when they get to one of these areas, they're going to make a decision. Maybe this is where they take profits. Maybe this is where the opposing force dumps 1 million contracts in, right? Maybe this is where they can't decide. They don't know whether they want to go up or down. But I can tell you right now that the people that control the market know exactly where these key areas are. So we've come up with a plan. So you guys don't trade into them. And let me show you exactly what that plan is. Price reaches the area. That's the most important part, guys. Price has to reach that area. When it does, it sets off the decision-making process. So we're going to keep it very simple. If price reaches an area, fibs, yellow 1-to-1s, divergence high or low lines, and the trigger lines remain above support or below resistance, this is an area that may stop the market. No more short trades. So at a low, it's going to look like this. Price reaches yellow 1-to-1s if the trigger lines remain above. No more short trades, you don't have a clear path. If price reaches Fibonacci support and the trigger lines remain above, no more short trades, you may have an area that is going to stop the market, reverse the market, create an untradeable bounce. And then one more, this is a divergence low line, guys. And what divergence means to everybody is that there was a loss of momentum at a pivot. That's it. If you see that line print, guess what? There was a loss of momentum. Don't give it any more power than that. Everybody wants it to be some huge catastrophic failure. It's not. But when price reaches that divergence low, when price reaches that blue line and the triggers remain above, now it's a termination condition. Don't trade into it. This area may stop the market. We call that a pivot stop out. When price exceeds a blue line and goes back above, absolutely no more trades into that area. So these are at lows, and let me find my highs picture. There's another one of those pivots. There was a loss of momentum. It created a magenta line. This is not a termination condition. It's just a loss of momentum. But when price reaches the area, the triggers remain below. Now it's a termination condition. This is what we call a pivot stop out. Here's your pivot. Here's your stop out. Down it goes. Don't go long. Keep the powder dry. Price reaches resistance. Triggers remain below. Don't go long. Price reaches yellow 1-to-1s. Triggers remain below. Don't go long. Guys, I can't stress this enough. This is the easiest way for the new user to stay out of trouble. This is the easiest way to never get caught trading into an area that may stop the market. And then once again, let's go back to my crude oil chart here. And I want you to see something. Where did it go? That is the small chart. We want the large chart because you know what? I closed out my large chart, guys. Hey, if you ever do that, here's a great lesson real quick. If you ever accidentally X out your large chart, close the workspace, but don't save it. And then when you pull the workspace back up, that large chart is going to magically appear. So there's a good lesson that comes off of that. So we'll come back and we'll scroll back and look at some termination conditions. But so far, is everybody cool with that simple recipe? If price reaches, none of the triggers break, guys, just sit on your hands and wait for a second. Let's see what that reaction is going to be. There's 3 possibilities. It's either going to reverse the market. It's more likely to if the triggers are above it and weak. It's either going to break. Areas break all the time. Otherwise, we'd be caught in this tight little range. Or there may be a fight, like a lot of indecision at that area. So how do I know an area is broken? If we know when it may take away my advantage, we consider areas to be broken when both the small and the large triggers, and this is the key, guys, both the small and the large triggers get to the other side of the area. So in this case, this was Fibonacci support. And I want you to see that, like, the whole life cycle of this. We reached Fibonacci support, the triggers were above, and we said to ourselves, hey, let's not go short into support. I've lost the advantage of momentum or of a clear path. And because I don't have a clear path, I don't have my rules met, I choose not to trade. Well, eventually the small and the large get through that area. You'll notice that it was odds favorable momentum that broke it. And both the small and the large are now beyond support. Support's now behaving as resistance, and our path is cleared, and we have room to the next key Fibonacci area. And this path is going to remain clear until I hit the next thing. So here I have a clear path, and I also have odds favorable momentum. And ladies and gentlemen, you will be able to pinpoint right where that tail is most likely to form. And this is going to become your entry for the highest probability trend trade that you can take. So very simple in the beginning, guys. I want you to give yourself only two options. Price reaches the area, triggers remain below resistance, above support. Just sit on your hands for a second. You don't have to be in every move of the market. 90% of your day is reading indicators. Once the small and the large clear the area is broken, the path is clear, and rule number 2 is in play, guys. You now have a clear path, and you're looking for your rules to be met. So for the brand new user, there's two options. It's either broken or it's not. And that's going to take you to your medium probability look. Guys, remember I told you I'm going to give you the recipe for a medium probability trade. This is going to be a trade where areas have the potential to break. So when price reaches the area, if the small triggers smash, and I mean smash, guys, 3 or 4 points above the area, not just eke, but like really with assertiveness, blow through that area 3 or 4 points, and you have odds favorable momentum, well, now this area has the potential to break. But it's only potential, guys. It is not a clear path. It can't be a clear path because both triggers aren't above. So when the smalls break, but the large lag behind, you have an area with the potential to break. And what you're going to do is you're going to rely on that momentum, and you're going to rely on your ability to pinpoint entry areas. And this is where you're going to find a lot of opportunities as a new user. I'm going to give you a recipe to take these trades because sometimes they work. And then sometimes, even with all that momentum, the market still reverses. So this is a medium probability scenario that you will have to be a chart reader in order to be able to take it and manage it assertively. And then this is my favorite picture, especially for you new users. And then we go back to the live market, you're going to see this as well. Even with odds favorable momentum, price reaches yellow 1-to-1s. Everyone in this room asks themselves, where are my triggers? And the only answer is they are still above the yellow 1-to-1s, and therefore, no trades. No worries. So PC, we'll start hitting these probably in about 30-35 minutes. If I get to your chart and you're not here yet, we'll just revisit it. Let me know when you get back. So we reach support, yellow 1-to-1s. The triggers remain above, and next-gen users say to themselves, you know what? I'm not taking a trade into this area. It might reverse the market. It might create an untradeable bounce. And it saves you from losing the trade. And then that untradeable bounce goes directly to resistance, and all of the triggers remain below, and you're not going long. And that saves you from taking the untradeable bounce there. And then the next untradeable bounce. And it continues for about 45 minutes, ladies and gentlemen. 90% of your day is spent reading indicators. This is your 90% where you're going to develop the ability to just say to yourself, my rules create an advantage. My rules are based on patterns that have been proven to win more than they lose. And this statistical advantage is why I'm willing to take these trades. And this 90%, guys, I see new users all the time give up $500, right? Give up $1,000. Blow out their accounts because they're so sure of their opinions that they abandon their rules. My goal is that you don't become one of these people. What you do is you wait for that 10%. You wait for that 10% where you have momentum, where your path is clear, and where you use your ability to understand where the market is most likely to continue, and you enter, you pinpoint right where that tail is most likely to form. And what happens is this turns into about a $450 trade. But if you got excited and antsy and started trading opinions, you're still down 50 bucks, right? Or you're still down $550, or you're still down $1,550. So my goal for you guys, once again, I'm going to say this, there's an easy way and there's a hard way for the brand new user. Be patient. The right trades will come along. Be patient. Be a chart reader. Wait for these advantages. And what you're going to find is that it's easier to keep the money that you make. And more often than not, I notice that it's not an inability to find the correct trades because, guys, we define it and we make it easy. It's the inability to stay out of the wrong trades, to take the inability to avoid trades where that statistical advantage isn't present. That's what's detrimental to the average trader. It has nothing to do with recognition. It has everything to do with patience. So find a distraction. I draw. I have a sketchbook on my desk. Sit through that 90%. Learn to be patient and then know your rules well enough that you never miss this trade because this is where money is made, guys. So is everybody comfortable? I think we're there. Let me pull up my large chart real quick. Let's go see if these termination conditions actually stop the market. Resistance with weak triggers. Look at the bounce, guys. Support. Triggers don't break. That's where your reversal started. Look at the indecision in between the fibs. And you can just scroll back, right? And you can say, holy crap, resistance is exactly what started that giant push down. That's rule number 2. Perfect. And I want you to see this. Weak triggers create a retracement. The area has the potential to break but doesn't break. There's your pivot stop out at a divergence high in resistance. The triggers don't break. The triggers don't break. The triggers don't break. Rule number 2 is designed to keep you out of this indecision. Rule number 2 is designed to keep you from getting caught when there is no clear path. And then once we come off that resistance, guys, and we can go back and look at it, there's one of those tails with odds favorable momentum. There's one of those tails with odds favorable momentum. We'll go back and see if those were trades. But if we keep going back, support, the triggers don't break, off it goes. You can see that rule number 2 again, creating consolidation in the market. And if you're just patient, eventually it's going to come back and give you what you need. And this is our most current bar. And I'm a tick off of resistance, guys. Almost looks just like that, doesn't it? Crazy. Patterns repeat themselves every day. So is everybody comfortable? Rob's comfortable. How about everybody else? If price reaches an area and the triggers remain above support, below resistance, can we sit on our hands and do nothing? Can we say to ourselves, man, there's no reason to risk my money. Nexgen is better than that. I'm better than that. Sometimes the market doesn't make it to those areas though, guys. Sometimes it reverses from the middle of nowhere. This is just a pivot, middle of nowhere out there in space, and it goes up and it does it here too. This final termination condition, guys, this is the only time I'm going to let a small chart tell me that rule number 2 isn't made. This is the only time I'm going to let a small chart say I do not have a clear path. And that's going to be 3 divergences in the same price range. And I want to give you guys this definition of divergence, and I want to do it visually because I think visual helps a lot. We're going to use 2 different arrows, guys. White arrow is price. When price comes down and goes back up, we call this a pivot. That's all it is. It's just a pivot. Price goes down, price goes up. Price goes down, price goes up. We create pivots. If momentum does not follow price, I'm going to use a yellow arrow. If the momentum in the move lags behind, if the momentum in the move doesn't keep up, if the momentum in the move drags its feet, you're going to recognize it through this negative number in this cyan, it just means light blue, line that extends to the right. The negative number has no bearing on anything, guys. It's a byproduct of the calculations from your software. But what happens is if I see this cyan line 3 times from a low, or I see this magenta line 3 times from a high, I know that there were 3 losses of momentum. And on any time frame, 3 losses of momentum is a termination condition. The path is no longer clear. You're watching a shift in what is happening. You will see it on a small chart first, which is why this is the only time I'll let a small chart tell me that there is a termination condition present. These 3 divergences become more powerful if I get that weak triggers, that anything can happen trigger look. So now visually, 1, 2, 3 losses of momentum, and I couple it, there's a plus, with weak triggers. Well, now I can say, oh my gosh, I'm getting every sign I need to say this market's struggling to push down. And it becomes more powerful still if that final pivot is higher than the previous from a low or lower than the previous from a high. It creates what we call a head and shoulders pattern. And a head and shoulders pattern lets me know that not only could price not push any lower, but momentum is also dragging as well, guys. So three divergences in the same price range can absolutely kill a move. Three divergences with weak triggers is more likely. Three divergences with weak triggers and that higher pivot from a lower, lower pivot from a high is even more so. And you're going to see this look at a low and this look at a high, guys. When your large chart, that slow moving freight train of a chart, can't give you that information fast enough. So even with odds favorable momentum and a clear path, if my small chart looks like this, well, then I'm just not taking that trade. So guys, that's termination conditions. Everybody cool with that? Large chart must have strong triggers. If it does, I have momentum. Let's look for the clear path, right? These are in an order for a reason. Large chart, no termination conditions. No area is likely to stop the market. If termination conditions are false, if there are none present, well, then I have a clear path. And guys, this is where the magic happens. Rule number 3 is going to happen on that smaller, faster chart. Rule number 3 is a reflection of the small crowd, the people without the money to stop things, but maybe enough to create ruffled feathers. And the small crowd pushes against everything that the large crowd wants, guys. And we call this a retracement or a pullback. We're going to take advantage of the small chart through rule number 3, guys, because rule number 3 says that we're going to use a limit order. We're going to understand where the market is likely to continue so precisely that we're going to wait for the market to come to us. And we're going to have that limit order waiting at an area. So the large chart, areas were problematic. Areas could ruin the party. Areas could create the bounce. Areas could stop the trend. Well, the same is true, just go in the other direction. On a small chart, we're going to use fibs, mid-bands, yellow 1-to-1s. And what that's going to do is give the market a place to bounce, to continue with what the large crowd wants. But we're going to tuck those areas inside of triggers. So the one breath version, I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. And guys, I'm going to encourage you to let your triggers be what we call favorable. There are two sets of large triggers on your small chart. There is the smooth moving, and those are native. These are the ones that we're going to use to establish momentum. Large trigger, small trigger, separation, odds favorable momentum, absolutely love it. And then there's these stepped versions, guys, and this is nothing more than the large triggers off of your large chart. They are superimposed over onto your small chart. So these large triggers are your synthetics, and then these large triggers are your natives. And what happens is these triggers are nothing more, and I'm not going to get all mathy on you guys. These trigger lines are nothing more than moving averages. That's all they are. They are a moving average, a fast one and a slow one, of what's happening in the market. But one of the phenomenons of moving averages is that price returns to a moving average. Price loves to correct to a moving average. So what we have found in, I don't know, 28 years of existence is that when these two moving averages overlap, one on top of the other, wide in the direction of the trend, guys, this is what we're going to call favorable large triggers. And favorable large triggers, it minimizes your risk dramatically. It really pinpoints where the market is most likely to continue. So for the brand new user, I always encourage you guys, change it from areas inside of triggers to areas inside of favorable large triggers, because when your correction points begin to split, when your moving averages begin to split, when your large and synthetic begin to break away from one another, what happens is the correction point grows, guys. Now you have two spots where that price may return to. Now you may have two spots where there's areas inside of triggers, and it becomes more difficult to be precise with split triggers. So embrace the idea. Rule number 3, the best of the best. You're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And your long entries are going to look a lot like that. But only if the large chart has odds favorable momentum, and only if the large chart has a clear path. Can you guys give me a why? If you see how the large chart says go, 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 let's find an entry, because this is the look that we want to commit to memory, guys. And we don't trade tails. We don't wait for these tails to form. What are we going to do? Man, we're going to dissect it. We're going to take this one bar and at the top of the bar in the live market, we're going to say to ourselves, oh, I hope the small crowd fights. And if they do, it starts with a reversal bar. And from this reversal bar, let me blow it in so it's annotated. This reversal bar says to me, hey, here's the beginning of the pullback. Here's the beginning of that small crowd fight. Here we go. So at the time of the pullback, the first thing I'm going to do is I'm going to identify my favorable large triggers. That's what the red box represents. From the highest point of the trigger lines, the large triggers, to the lowest point. It can be synthetic on top of large. It can be large on top of synthetic. But what I know is that these triggers are where I expect price to correct. I don't expect triggers to stop price. I don't expect a moving average to be able to reverse the market, guys. But if I have a mid band, if I have a fib, if I have yellow 1-to-1s inside of those favorable large triggers, well, now I've got a place for the market to bounce. And I always tell people, just think of it like this. This is you throwing a tennis ball as hard as you can. This is your wall right here. I don't expect the tennis ball to bounce off some numbers floating in space, but what I do expect is that when it hits that wall, I got a good shot of it creating a ricochet, right? Equal and opposite reactions. Sometimes I can throw it so hard that it goes to the second wall, but I'm still expecting that bounce. And that's how we create our window of opportunity. From the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers, guys. And you are going to go back and study this, and you're going to learn to believe this with such ferocity that you're going to activate a limit order at that highest point, and you're going to say, you know what, small crowd, come get me. I know exactly where you're likely to bounce, and this becomes your entry for the highest probability trend trade. We don't trade the tails. We're long gone by then. We trade the reversal bar, identify the triggers, pinpoint the areas inside, and get that limit order right there and say to yourself, I have every advantage that I know how to have. I've pinpointed where the market is most likely to continue. And this is the trade that typically 70 to 80% of the time when the rules are met makes its way off to that next key area. So for a long, for a short, it's the same thing. Reversal bar. From the reversal bar, we're going to identify triggers first. We're going to say to ourselves, triggers are where I expect the price to correct, where I expect price to go. But I need something inside of those triggers for it to bounce off of. Fibs, midbands, yellow 1-to-1s. Guys, there's nothing but one midband inside of those triggers here. That's about the smallest window of opportunity you are ever going to create. Your limit order goes just below that lowest point of resistance. You learn to ignore the areas beyond the correction point, because really, if price gets beyond these triggers, hell, that's not my trade anymore. I expect it to correct inside of triggers. I expect it to bounce from the area. And the more study you do, the more you're going to become very, very familiar, and you're going to insist on this look to enter the market. And one of the great things about this methodology, about this trade, I mean, the first one, obviously, is that it typically wins 70 to 80% of the time. What an outstanding odds, right? And what you'll learn is that I will always bet on the high probability trend trade. I will always activate the limit order on that high probability trend trade. And my ability to understand where the market is most likely to continue, to pinpoint it, that precision, also lets me know where the market shouldn't go. It should not go beyond that correction point. It should not go past those areas beyond that window of opportunity. And guys, this is where your first stop is going to be placed. There's an old adage that successful traders, mature traders, well, they manage their risk before they ever worry about profits. You guys are managing your risk through momentum. You're managing your risk by having nothing in the way. You're managing your risk by pinpointing where the market is most likely to continue. And you're managing your risk by having an intelligent stop where the market shouldn't go, 4 to 5 points I'm sorry, 4 to 5 ticks beyond that window of opportunity. And then here's the sad thing. New users, I want you to turn your volume up. Actually, I don't think it's sad. You will lose trades. That stop will get hit. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And this is one of the reasons that study is so important. Because if you go back and look at 100 instances of odds favorable momentum and a clear path, and you watch how many times it bounces off those areas inside of favorable large triggers, well, what you say to yourself is, I'm going to take this trade no matter what. And I know that I'm going to lose 2 to 3 of them every 10, and that's okay because that's a cost of doing business. Because small losses are a normal part of a positive equity curve. And then it gets even better because with all those advantages, you're more likely to get a reversal bar in the direction of the trend, and you're going to reduce your risk 2 ticks above for a short, 2 ticks below for a long. And it's not uncommon to see next-gen users, even on trades that fail, lose maybe 3 or 4 ticks, $30, $40, $20, $40 in there because you are so in tune with where the market is likely to continue that your stop plan is very solid and very pragmatic. So let's go through a short real quick. And guys, if you have questions about this, let me know because we're almost done with the high probability trend trade. Rules are met on the large chart. I can't stress this enough, guys. The large chart leads the way. And if your rules aren't met on the large chart, the likelihood of success goes down. But with strong triggers and a clear path, all I have to do is wait for a reversal bar. It's not guaranteed. It's not promised. There's no, I don't know. It's either does or it doesn't. I'm not in control of that. But if it does, my job is to find my triggers, to find that correction point, to draw a box around them and say, this is where I expect those prices to go to. I don't enter on the reversal bar. That's the beginning of the fight. I don't enter hitting the triggers because there's nothing there for the market to bounce off to. So once I identify the triggers, I'm just going to look inside of the triggers and I'm going to say to myself, what areas do I have? I'm looking for fibs, mid bands, yellow 1-to-1s. And if they're inside of favorable large triggers, my window of opportunity, the point where the market is most likely to continue, will extend from the lowest point of resistance to the highest point of resistance. This is my window. This is where I expect the bounce, guys. And I am so 100% convinced that that's where the market is most likely to continue based on study that I'm going to activate a limit order. That's my yellow line just below that lowest point of resistance. And I'm going to say, come get me, small crowd. And guys, I've done everything that I can do. I've identified momentum on the large chart. I have assured that my path is clear. I have pinpointed exactly where the market is most likely to continue, and I'm waiting for them with a limit order. And I'm actually going to sell the market as the market comes up. And if they get to me, I'm in a trade. I'm in a short trade, but I'm in a short trade with odds favorable momentum. And I'm in a short trade with a clear path, and I'm in a short trade with the best area for entry. And the only thing I was ever in control of is whether or not these rules were met. And guys, this is the one that typically wins 70 to 80% of the time. This is your best of the best. And you can go back and study it. Let's kill that slideshow real quick. You can go back and study it. Let's go find one. Where were those circles that we made earlier at the beginning of this big move? There we go. 10:11 a.m. So I'm going to scroll back on my small chart, and I want to see what those circles look like coming off a termination with odds favorable momentum. Make it a little smaller. That one was a pullback right to a mid band, kind of in between those split triggers. Notice that it went to the higher correction point, but we had a bounce point. That second one pulled right back to the mid band twice. It went in, scared you, pulled right back to the mid band, and then continued down. And guys, it pulled right back to the mid band and continued down. And as that trend got established and became powerful, even without momentum, it still pulled back and continued down. So I'm developing trust in this look, guys. I'm developing trust in the idea that it's a simple recipe in the beginning. In the easiest way. So let me ask first, are there any questions about the high probability trend trades? Just a quick heads up, there's your entry, there's your sequence, and if you start clicking on these that say perfect trend trade, odds favorable, clear path, look at the circle, right to the areas of support inside of favorable large triggers. And guys, this was crude oil in November of 2021. And it's the exact same pattern. The exact same pattern. Let's see if we can find an even older one. They're not working. Here we go. My links aren't working. Hold on. Let's see what the oldest one in the spreadsheet is. Nope, that is 2021. That may be it, guys. 1121, same trade. I've done it like 5 times here. That is the S&P December 22. It's the exact same look, ladies and gentlemen. It's strong triggers, everything down, pull back to resistance, easy money. So what I'm telling new users, and I want you to believe me 100% on this one, because I promise you, your best interest is exactly what I'm focusing on. If you want to be able to find this trade the quickest, if you want to be able to understand these advantages the fastest, if you are interested in becoming a chart reader and a confident trader ASAP, you've got to be able to recognize some very simple looks. You've got to be able to recognize strong triggers, because that's rule number 1. And you have to be able to recognize weak triggers, because you want to know when that advantage is gone. And you have to be able to recognize a clear path and terminations. Even those 50-50s, that medium probability, start building up your repertoire. And then taking pictures of entries, guys. And this is where the second tab is. These are your strong pictures. Green for go, right? These are, oh, Coker, I hope you have a safe flight, man, and we'll see you when you get back. I hope it's vacation and not work. Have a pina colada for me. Clear path, 50-50 look. Entries, long and short. Guys, if you go through this process, this is 265 pictures. This is about 4 or 5 hours of your life as a brand new user. But you're not just taking pictures. What you're doing is you're including the whys. I'm a big fan of language. And language, when you take a picture, I'm going to show you how this works. If I take a picture of just strong triggers, well, I may not be able to go back and look at this and understand why. Was I looking at the fib? Was I looking at the mid band? Was I talking about this pinch down here? But if I draw an arrow and I describe what it takes to have strong triggers, smalls above the large are wide, they're angled in the direction of the trend, well, then what I can do is I can make sure that I always have this look every time I'm looking for a trade. And if I use the language on the chart, what it means to me, why am I looking for strong triggers? Because it gives me momentum. What does that correspond with? It corresponds with rule number 1. What happens is I associate a look with an advantage, and I start to speak to myself in terms of advantages on my charts, and not, man, I hope it goes down. I think this could break. I want it to do this. I'm saying, man, I have momentum, or I don't have a clear path. And if you do this for every individual picture, guys, your brain is going to be so entrenched with these great ideas that it's going to become easy to recognize, to take the 3 pieces and put them together to form a trade. So if we go back to the live chart, guys, my smalls are breaking above the large. I've got a good look at momentum here. My large triggers aren't quite through the area, but I do have support right there inside. And all that is a chart read. I didn't enter a trade to do it. Here I had odds favorable momentum, and my first pullback was right to resistance inside of the triggers, and I've still got odds favorable momentum, and it's still right back to resistance inside of triggers. And if I got in the market right here, I could make a case in a court of law that this is what I'm looking for. It doesn't guarantee a win. It doesn't mandate that this market has to go down. But what I can say is that with this look, right, and with this potential entry, I can not only get in at areas inside of favorable large triggers, I can manage my risk by putting my stop where the market shouldn't go. And what happens is I become very in tune with the market, and I say it either goes or it doesn't, I don't care. But if I go back to my pictures and I look at it, I know that this one did what I needed it to do. And And that comes back to having a plan, guys. Comes back to having a trading plan. And I'm giving you the plan right now. And this plan is a stepping stone in your journey, guys. This is rock solid. This is designed to optimize your chances of success with the high probability trend trade, or that 50-50 trade that we talked about. But it's going to be your simulation, your study, your class feedback, your continuous practice, and you'll create your own plan through your chart reading, guys. But until you can do that, don't fight the large chart. Keep it simple. Focus on your high probability entry. Never had anybody follow this checklist for entry, ever, and do worse than 70%. So I'm going to give you a checklist that you can print off. I'm also going to give you the exact same checklist with what it means to have a strong top or bottom, what odds favorable, anything can happen, identifying termination conditions. Guys, this is your cheat sheet. I'm giving you everything that you need to be successful. I just need you to go back and study these looks so that they become easy. But your KISS plan is designed to get you into the market where the market is most likely to continue. Your KISS plan is designed to optimize your chances of success. Once you're in, you're going to have to manage it, ladies and gentlemen. You're going to have to do something with that entry. And the way your entries are super mechanical, your management can be too. And your entries are 100% dependent on your ability to get into the market where the market is most likely to continue. So don't forfeit those lessons. Don't skip out on learning how to identify this window of opportunity, because it's what's going to set you up to know where to put your stop. And then you're going to have two options. You're either going to get stopped out, and that's going to happen, or it's going to give you a reversal bar. And if it gives you a reversal bar, well, then you can say to yourself, you know what? It's doing what I wanted it to do. It's going the direction I wanted it to go. I'm going to reduce my risk 2 ticks above it, and I'm either going to get stopped out, or the market's going to go down more often than not, and it's going to hit my target. And if it hits my first target, guys, we've put it out there for the brand new user at $100. $100 target, easy to hit with all that momentum. And $100 target, it's going to get hit more often than it doesn't. And that $100 creates an enormous amount of confidence, because it feels good to win a trade. It feels great to find success. And then we're going to compound that success, that happy feeling, by going break even. So absolutely nothing can hurt us. And then once we have that break even in place, it's either going to hit our second target, which is only $200 in the distance, or it is going to go ahead and stop us out break even, which honestly, it just doesn't hurt that much for that to happen. Getting stopped out break even, you pay a couple bucks in commissions, whatever, no big deal. But if that trade works, guys, if that highest probability trend trade works, that's a $300 trade. And there's a lot of people that firmly believe that in order to make money in the markets, you've got to make $500,000, $700,000 trades. I've got to hit a home run every time. But the reality is, guys, I just crashed my Ninja Trader doing stuff off to the side. That $300 translates into a $1,500 week. And that $1,500 week translates into a $6,000 month. And that $6,000 month presents itself as a $72,000 year from one high probability trend trade going the distance every day. And then profits will begin compounding, and trade copiers and all those different things that you can use to put yourself in a position to make more. And that's where the spreadsheet's going to come in and pay dividends as well. Your very basic plan is going to have you focus on a very mechanical entry. But once you've got some reps, once you are more comfortable with what you're looking for, whoops, let me blow this up so I can not do this. You'll find when there is odds favorable momentum, when the path is clear, when everything is going right, you can hold for bigger moves, and you can turn those $300 trades into $350, $400, $500 trades. But everything begins, guys, 100%. Everything begins with having a plan, with getting in where the market is most likely to continue, with understanding the advantages of momentum, a clear path, and then being able to define your entry area based off of those three things. So I'm going to drop these in the room, guys. I'm going to give you the KISS plan. I'm going to give you the high probability trend trade checklist. I'm going to give you the same checklist with all the pictures on it. I am going to, what else did I give you in there? I gave you the chart reading 101. And then once again, I'm going to drop my spreadsheet in the room because I feel like it's got a lot of great information on there. And I'm also going to give you the PowerPoint that I teach from because there's a lot of great stuff going on there. And how's our trade doing? Is anybody watching it? We're still in it. We had our reversal bar. Everything still says down, but those small triggers are a little bit against it. And we did have our 10 a.m. fib update, which is a little problematic sometimes. We'll keep our target at 100, our second target at 200. And the reality is, guys, is I either win this trade or I lose this trade. Does everyone understand why? Because of that look there, I was willing to get in at resistance inside of favorable large triggers. Notice that all the triggers are below resistance, but I had weak triggers, I had divergence, it pushed up higher, and then we just had a fib update, which is kind of a bummer. But it is what it is. We'll just let that one run because it's simulator. And I'm just going to stay in it, and we'll see what happens. Because it's simulator, and this is where you go, guys. This is where, this is how you get to where you want to be. By getting in, taking this trade, and here's the most important part. Let's snap a picture. At the time of entry, we definitely had momentum. And at the time of entry, we definitely had a clear path, right? That's the most basic. And then we got in at resistance inside of triggers. And now we're keeping it very mechanical. 2 ticks above the reversal bar, first target at $100. And if you drop this in the room, guys, if you take this picture and you put it in the room and you say, Mark, can we talk about this? Maybe the divergence scared you. Put it on there. Talk about it. Maybe those weaker triggers scared you. Let's talk about it. Maybe the split triggers scared you. Let's talk about it. Let's talk about what you see. Let's talk about why you did what you did. Let's talk about where you did it, what it means to you. Would you do it again? Does it follow your rules? And you'll get to this point to where you never ask, hey, Mark, was this a trade? You'll only say, hey, Mark, check it out. My rules were met. I believe my rules were met. Can you confirm? Because it looks like everything is right on this trade, and I just want to make sure that my chart read is accurate. What do you guys think? This is our high probability trend trade. So brand new users, you're going to hear the first thing every hour, every day, teaching you to read your charts. You're going to hear it over and over. You're going to see it over and over. You're going to be able to identify it in the moment. You're going to learn to build trust with it. You're going to say to yourself, with this look on the charts, they're going to have to come get me. I'm not going to just give my money to them. They're going to have to come find my stops. And we'll bring up crude oil real quick. And if there's no questions on the high probability trend trade, guys, I'm going to take 5 minutes. I'm going to stretch my legs. I love seeing 47 people in here. That's awesome. New users, the easiest way to get feedback is to open up that TechSmith capture. Does everybody have it, new users? I want you to do me a favor while I'm taking a break. I want you to open up your TechSmith capture. Even if you don't have charts up, I want you to take a picture of something. I want you to smash on that big red button and click and drag just a little spot. Last week we did cute puppies. Everyone started posting puppies in the room. It was awesome. Click that camera and give me one arrow, give me one shape, click and drag, and give me one call out that says, I don't know, how about I love Nexgen or something like that. And I want you to click that copy button and I want you to drop it in the room. What's the software called? It's the Nexgen T3 Fibs Pro Trader. Nexgen T3 Fibs Pro Trader. Oh, the capture software. I was like, all right. So it's TechSmith Capture. There you go. Chris Novak just dropped it in there. Parker, it should be loaded on your screen or on your computer already. But if it's not, let me drop this link in the room for you. It is a 2-minute download. It'll take you to techsmith.com. And the download is literally like a 2-minute download to get you squared away. And it gives you this yellow icon on the bottom, the TechSmith capture. And then once you bring it up, it's as easy as a big red button um, to get it going. On the S&P, we're still in it. Large chart still says down, right? So this is the only thing that we talked about on this one, Jonathan, was being able to pinpoint the window of opportunity and where the market is most likely to continue. Eventually, your super pragmatic management is going to change your approach once you're in. So in my plan, a second divergence that's higher is an exit condition for me. So if that happens, I have to close out and get out of the trade. But right now, the only thing that we're looking for is, can you pinpoint your areas inside of favorable large triggers? Because that's the most important part, guys. I'm not worried about wins and losses at this point. I'm worried about becoming a chart reader. Does that make sense, Jonathan? So right now, everybody's on the edge of their seat. Will it win? Will it lose? And if it wins, Nexgen is great. And if it loses, Mark is absolutely full of shit. We're doing this with no management, guys. The only thing we did is pinpoint where that bounce was most likely to happen. Can we all agree that's exactly where the bounce happened? Isn't that awesome? Once you figure this part out, life gets easier, guys. Once you figure this out, and I'm not fighting the large chart. The large chart says down. All of my triggers are below resistance, right? I got in where the market was most likely to continue. I have a very conservative $100 stop or first target. And watch this. If this turns into a reversal bar, guess what? I have a pivot to move my stop behind. I'll reduce my risk even more. But Jonathan, does the entry make sense to you? And if you got in at the mid band and got stopped out, maybe you'd had to take a second entry. But the idea is that you can go through and just pinpoint that area where the market is likely to continue. And then once you can do that, guys, I'm telling you, everything kind of changes. Everything is dependent on entries. Everything is about getting in at the best of the best spot. Management can be super pragmatic and mechanical in the beginning, and then you will craft a plan that has you putting in exceptions, that has you putting in, if this happens, then I'll exit. And what you'll do, it's starting to, awesome. So just entries, man, just give me entries for 20 days and don't worry about anything else. And you'll be absolutely floored that once you get to the point to where you understand where the market is most likely to continue, you're going to see this bounce enough that you feel compelled to always enter. You're going to be able to go back and study that. Look, watch this. Let's see, perfect high probability trend trade. Momentum, clear path, pull back to support inside of favorable large triggers. So we're committing it to memory. High probability trend trade short. Momentum, clear path, pull back to resistance inside of favorable large triggers. Over and over and over. Let's see what else we have. And then, guys, I'm going to show you right here. Check this out. Where did it go? Perfect high probability trend trade short didn't work. Odds favorable, clear path, perfect entry. Dang it, they got me. I need you to be just as okay with this as you are with this, because they're the exact same trades with the exact same rules, with the exact same management, and anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And guys, this is our first hour. You can keep it simple, right? You can focus on the looks that'll get you in. Keep it very simple, keep it very focused, get great at one thing, and then you'll begin to move on. And what you'll find that as soon as you begin to speak to yourself in terms of advantages, you're going to see patterns that repeat themselves all the time. So it looks like we just got a second higher divergence. My trading plan says get the heck out, but let's let this one run just for the fun of it. I'm going to take 5 minutes, guys. If you have questions, post them in the room. If you have charts, post them in the room. When I come back, we are going to talk about everything that you guys have posted. I got you. So, Parker, you messed up your charts. So, can I give you the easiest way to do it? Um, if you ever do that, so the first thing is, let's say that you're trading, and I did it this morning and I actually fixed it for everybody. Is you're trading, right? And you accidentally shut down your large chart and you're like, "Oh crap, there goes my large chart." I'm going to go to my workspaces and I'm going to close, that was my S&P. I'm going to close my S&P and I'm not going to save it. And what that's going to do for me is that is going to, when I bring my S&P back up, watch this, that large chart will be there. The next thing you can do is if for some reason you don't catch that, you can go to the resources page. And guys, these are great questions. And from the resources page, if you download the indicators, it'll reset everything for your NinjaTrader. It'll give you all of the workspaces, all of the templates, and that's just kind of, and it'll overwrite whatever's there. So it'll give you that new NASDAQ space. And then what I can do for you right now, let me go in and I'll give you my NASDAQ space if you want it. Actually, you know what? I don't have a version from, let me look in my recycle bin real quick and see if I can find. A NASDAQ workspace that is the one, there we go. I'll give you one in the room right now. And that way you can just, and I'll show you how to do this. Let me pull this back up. Sorry, I'm working behind the scenes here. So here is the NASDAQ mini futures right there. And where you're going to have to extract that to, Parker, is you're going to go to NinjaTrader, Workspaces, and you're going to, it's Documents, NinjaTrader Workspaces, and you're going to extract it directly into that workspace. You're going to have to close down NinjaTrader and bring it back up, but then you'll have that workspace. And then, of course, guys, I mean, it goes without saying, but I like to say it. We have the most amazing tech guy in the world. And over here on the main Discord, you can go through, let me copy the link. So if you're ever having technical issues, guys, reach out to Jason. I'll try to fix everything that I can fix in the classroom and keep you from having to do that. But if you ever get so stuck that it's frustrating, don't let yourself get frustrated. Don't put yourself through that. Nexgen has the absolute best tech department that you could ever hope for. And Jason can fix most things in a matter of seconds. So I'm going to leave you guys with my S&P charts loading up. It's running all its calculations. You're still in the trade, guys. We'll see what happens. And I'll be back in about 5 minutes. When I come back, we're going to start looking at all the charts that you guys have posted. Notice that my trigger lines have turned against me. I wonder if that is a thing. We'll see what happens. I'm going to leave everything in place. How about, yeah, we'll leave everything in place. I will see you guys in 5 minutes. Go stretch your legs, guys. Back in a minute. Sorry, I crashed my Ninja again. I'm going to pull it back up. I'll be back in just a minute, guys. Fuck, I can't keep Ninja triggered open. All right, y'all, let's get back at it. I am going to start clicking on charts that you guys have posted. Sometimes people post some charts on the previous days, over the weekend, stuff like that. So I'm going to look at, Paul did some market play replay, which is a great way to get that experience that Nexgen can't give you, is to go back and replay the markets. This is one of the options with NinjaTrader. You have the ability to go back and kind of historically do it. And I want to talk a little bit, I'm going to use Paul's pictures to talk about it. What it means to go back and do market replay, guys. Market replay is not designed, it's not a show off. It's not a, hey, look at me, look how I did this, look at the money that I made. Market replay gives you guys the opportunity to go back and replay the day, to pause, see the pause button, and to say to yourself, hey, are my rules met? And if my rules are met, well, then I need to take a trade. And I think that is one of the best ways to utilize market replay, is it's going to show you the potential of the market. It's going to show you the potential of the methodology. It's going to show you the potential of what happens when you follow rules. And I think that that's such an important thing for you guys to do, is to see what happens when you follow the rules. So here's a great one, Paul. And you'll notice that there is um, the divergence, the odds favorable momentum. And guys, look at his entry right at resistance, right inside of favorable large triggers. And I'm really not sure that there could be a better entry. Can everybody hear me okay? It looks like Discord pictures aren't coming up. I'm going to try a little reboot on Discord. Usually you guys can hear me when I do this. But I'm going to do a quick clean and come back. And I don't know if you guys can still hear me right now. Sometimes it keeps my microphone up even though I can't see Discord. And then I'm going to come back to the education room and pop it out. But what happens sometimes is these guys make it so that I can't see. It looks like the microphone is still going, so that's a great thing. Let me share my screen real quick. We'll get back to Paul's picture. And one of the things that I said, guys, when we first started this morning is that you're going to understand where the market is likely to stop. You're going to understand where the market is likely to continue. And Paul absolutely nails it, right? High probability trend trade setup. Everything is perfect. Look at that momentum. Like a sniper taking that great entry. And then you'll also understand where the market is likely to go. And guys, I think this is the biggest one. Is that when you see yellow one-to-ones, you can't see anything. Can you guys see, or is it not coming through? Let me try to reboot it. Malcolm. Morgan, you can see. Malcolm, you can't. Malcolm, let's see if this little reboot helps. Josh can see. Malcolm, is that good? Can you see it now? Okay. Yeah, that'll work. Nope. Yeah. So Malcolm, close it out and bring it back up. It may be on your end there. So I want to show you something that's pretty cool here. And if you guys want to write it in the room, what's everybody's goal? Every day, what's the goal? Awesome, Malcolm. Mine is to get paid. That's it. Mine is to get paid. And I want to show you this cool thing. So you're in at 79.46, right? And that market goes directly to those one-to-ones. Right at about 30. What is that? 25, 26, 27. So 19 ticks in the distance. You already took $130 on one. Is there any reason to not make this a $220 trade? Any reason not to get out at trouble? And this is where giving it back is hurtful. And I want you to see something. Because out at 45, and it made it all the way down to 25. So giving back $200, which means that you made 130 and that feels good. You're out break even, but you gave back $200. You knew exactly where the market was likely to go. And guys, this is greed rearing its little head. My job is to get paid. My job is to have an advantage at entry and to get the hell out when I reach an area. And eventually you'll adopt that. That's it. Once you take consistent, and how do you decide a trade is winning, Gerard? Through historical study. You need to be able to look at a pattern. That's all it is, guys. All it is a pattern. And you need to say, when I have this look on the triggers, when I haven't reached an area, and it comes back to an area inside of favorable large triggers, does this look win more than it doesn't? And the answer is a resounding yes, right? Which means the second part of that, getting in is half of it. Guys, getting in is half of it. Getting in is the important part. Because what it does is it puts you in the market at the right spot. And then you've got to manage it. And that's the second piece of the puzzle, guys. And if you give it back on Apex, you're absolutely right. You're gonna fail Apex. So getting in at the right spot. So Paul could teach a clinic on entries with this one. But the great thing is now Paul has this great little bug in his ear. And he's going to hear me when he hits an area saying, it's okay to get paid, Paul. It's okay to only make $220 on a trade. Let that ring in for a second. Only $220 on a trade. Only $220 in that 11 minutes that you were in the market. Does anyone else remember their 20s like I did? John and I were laughing about this morning. How when we were in our mid 20s waiting tables and bartending, that a $400 night was magical. It's like we'd won the lottery. Um, and $400 felt like all the money in the world. And we couldn't believe how fortunate we were back then. And now we turn our noses up at $400 as traders. We're like, huh, it's only $400. This is crap. How can I make a living like that? Guys, $400. I know, right, Sergio? $400, if that's the best you can do every day, guys, that's an $8,000 month. That's a $96,000 year. Um, so have some perspective. Do 220 twice. Do it 3 times. Take it to the bank, right? And then Paul, termination condition. If we only looked at the large chart or the small chart, it's absolutely beautiful, isn't it? Pull back to support inside of favorable large triggers. This little snippet lets me know that you thought, even though your rules weren't met, it was going to go without you and you jumped in. You said, oh no, because there wasn't anything on this chart that said get in. You said, oh no, what if this termination condition decides not to hold this time? And you gave it away. And these are the avoidable ones, guys. These are the ones where if you don't take this trade and you got out break even, and that's awesome. Or no, you didn't. You lost $100 a contract. So that's a $200 loss breaking rules. And if you learn to avoid this one, that's $200 that goes into the equity when you're taking the right trades, guys. Right here, we have that termination condition, and this is a 50-50, right? Guys, give me a yes in the room or a Y. If you see that the small triggers have smashed through, but the large triggers have not, letting me know that these areas have not broken yet. This is that look where all that momentum gives me the potential to have it broken. And I want you guys to see the reason for the most lost trade by new users. Whoops, wrong one. That wasn't a shape. That was a call-out box. One divergence on a 50-50 is a problem, guys. 2 divergences on a 50-50 is pretty much the kiss of death. 3 divergences says get the hell out on anything. So while the entry looked great, the probabilities went way down. And I don't disagree with Paul for taking this trade, but you have to have it in your head that if this divergence prints, I have to get out of this trade. And you've got to be astute because that saves you 3 or 4 ticks per contract. You already gave away the advantages, but you had a management opportunity, guys. And one of the things that I see all the time is people get great at entries. They get amazing at getting in where the market is supposed to continue. That's what we focus on for 30 days, is getting in the right spot. And then, there it is again, 2 of them, boom, gone. But then we got to do something with that greatness, guys. We got to do something with these amazing entries because not all of them work. But with a little bit of chart reading, with a little bit of understanding when advantages go away, we can create an opportunity. And Paul, I want you to see a pattern. Guys, I want you to see this. This is rule number 2. Rule number 2, didn't break, didn't break, didn't break, didn't break, didn't break, right? Over and over and over again. Doesn't break, doesn't break, doesn't break, doesn't break. Do you guys recognize this as a market that has consolidated? This is just going to be a little lesson for consolidating markets. If I go back and I look at that, where that market was consolidating, and it's right back here, and this is it. When you see a market do this, rule number 2 is not being met. When you see they can't establish a clear path, when you see these areas holding, guys, this is a consolidating market. This is a market where the buyers and sellers have their numbers, they have their plan, they have their wishes, they have their wants, and this is them saying, hey, you know what? Can't do it. Not going to make it. Nope, don't think so. We told you no, not happening. And I'm going to tell you right now, guys, when you have a consolidating market, the 50-50 trade is much less likely to work. No worries, Gerard. The 50-50 trade is much less likely to work on after consolidation because the sellers are trying and the buyers fight. So these almost broken areas, you find them holding more and more, which means that this trade needs to be perfect, right? That's the one that doesn't have the area anymore. That's the one where everything lines up. But my brother used to call it the fake out breakout, where you think the sellers took over and they didn't. And what you can do to kind of mitigate the losses on that fake out breakout is really adhere to the divergence idea, that it kills a 50-50 trade. And there it is right here. Your 50-50 trade, that area with the potential to break. It's right here in the KISS plan. I told you guys I was going to give you a rock solid plan for it. Good top or bottom, that termination that reverses the market. Odds favorable momentum on both charts. And then in 3 separate places, it lets you know that divergence is a deal breaker. For the brand new user, not being able to understand when you can skip that rule, so I blanket it with a very big bright red ink. Divergence, divergence, divergence. Don't do it, don't do it, don't do it. And eventually you'll understand when it's okay to take that chance. But for the brand new user, you can keep yourself out of a lot of problems by not ignoring that divergence. So Paul, great pictures, man. And I said this in the beginning, and I'm going to say it one more time real quick, is, guys, when you do market replay, don't let it be about making money. Don't let market replay be about seeing how much you can make, because you've already seen it. You're welcome. Use that pause button and make sure that your rules are met. Use that pause button and see what the potential is for you when you follow your rules, not when you remember that that was the spot the market broke out. And I hope that makes sense, because I used to do that. I used to try to memorize and then go back to market replay and go, hey, look, I just made $25,000. I traded the 100 lot when I knew it was just going to drop out of the sky. But it doesn't do anything to build trust. So use it as a tool, right? So 3 divergences in the same price range is a termination. Great recognition, Kenny. This termination is also support. Jonathan, do me a favor. Take a picture of it and drop it in the room. Because I can tell you all day, right? I can pull this up. It's not. Why isn't it, Jonathan? Do I have odds favorable momentum? I don't, do I? This is odds favorable momentum. So, Jonathan, this is where I would encourage you, because I've seen your name in the room long enough to know. This is momentum, and this is momentum, and it would create a huge advantage in your world to understand what momentum looks like. And even more so, I've given this out every day. There's your momentum. There's your momentum. There's your clear path. There's your termination. So you're just going to take these basic concepts back. There's no areas inside of triggers. I don't have momentum. This is a problematic look right now. So I don't have any rules for this trade. It doesn't mean that it won't go down, but I don't have any rules for the trade. My trigger lines don't agree on the large chart. I do have a clear path, but I'm void of momentum. So I need some sort of area to trade from. I prefer that it's inside of triggers. I don't have enough information to feel confident that this is a market that's likely to push the same way it would with those odds favorable momentum. Does that make sense, Jonathan? So this is where I encourage you guys. If you're like, I'm not sure if it has momentum, go back to the chart reading 101. Commit to this drill. No worries, Parker. So when it's set up, your large chart's on the left, your small chart's on the right. So this chart leads the way. I actually have traders, hey PC, that will minimize their small chart until the rules are met on their large chart. just to keep them from being lured into something. So Jonathan, from a high probability trend trade standpoint, I don't really have a trade here. For somebody that's been reading charts for a while, I am probably still in the short trade off a reversal bar from a second higher divergence. So from the high probability trend trade standpoint, because there is no momentum, because I can say without question rule number one isn't met, there's not an opportunity for me there. But I'm still taking pictures of it. I'm still looking at it. I'm wondering maybe there's something there that can help me later when I become a chart reader. I hope that makes sense. Termination, full reversal, odds favorable, clear path, perfect pullback to support inside of favorable large triggers. Kenny, are you with me, Kenny? Kenny, how did this trade feel with the advantage of a termination that created the reversal? And how did this feel with odds favorable momentum? And how did it feel having not reached that next area? And how did it feel with a pullback to support inside of favorable large triggers? Because guys, this is the best of the best. That is the greatest trade that you could ever take. I'm going to put Kenny into my Hall of Fame here, because I want everybody that learns this software to see that. Heart wasn't racing, was it? That's the easy one. How long did you have to wait for it? You might have waited like an hour and a half for that trade to set up. Maybe even 2 hours. But you killed it, and your patience paid off. Beautiful job. And then, so not a strong top, Kenny. That's a divergence, right? Just a loss of momentum. That's okay. That's a lower divergence. So when we talk about strong tops, guys, let's do a quick strong top lesson, because you are going to hear this term a lot. So strong tops, the first thing that has to happen is that there's a termination condition and that there's no triggers through the termination condition. And then Kenny, yours just isn't a termination condition yet. It's just a pivot with a loss of momentum. Does that make sense? We'll go back to the training guide real quick. I'll go to the tops and bottoms section. Nope. So here we go. And this is, guys, this is why this room is so important. Because half-truths, a little bit of an understanding, but not a complete understanding of the rules, can create false expectations, can create expectations that really aren't true. So Kenny, if the market comes down and goes up, it's just a pivot. That's the first piece of it. This is a pivot. And then if momentum doesn't follow, what happens is we get that divergence. And this divergence is nothing more than a loss of momentum. So, whoops, let's do the call out. Divergence is nothing more than a loss of momentum. It's not a termination condition. And I want to talk about why. Because does everybody remember when I said to identify an area that may stop the market, in order to recognize a termination condition, price must reach the area? Does that make sense, everybody? Price must reach the area. Guys, price creates this. This pivot is a reflection of price and momentum not agreeing. And then, Kenny, when it comes back and reaches that divergence low and the triggers remain above, now it's a termination condition. Does that make sense, everybody? When we talk about these momentum pivots, when we talk about the loss of momentum, the first thing that happens is, you know what, that may not be the one that I'm looking for. Here we go. Pivot versus a pivot stop out. First, we get the direction change. If there's a loss of momentum, exactly. So Malcolm, this is not a termination condition. This is just a loss of momentum. So when that line prints, it's just a loss of momentum. That's all. It's just divergence. But if price returns to the line, right? Price reaches an area, triggers remain below, now it's a termination condition. And if price trades above and back below, it's called a pivot stop out. And that's very powerful, even more powerful if it's at fibs. So nope, because the triggers are through the area, Kenny. It's just a loss of momentum. That's all it is. And it doesn't mean that the market doesn't have to reverse for the rest of the day, but it just means that in order to have a strong top or bottom, well, first of all, are we cool with the pivot stop outs with divergences? Divergences are only a termination condition if price comes back and reaches it. Over here, it's just a pivot with a loss of momentum. Up here, it's a pivot with a loss of momentum. And then when we get into these strong tops or bottoms that Kenny's talking about, and guys, a strong top or bottom is amazing. It means that price reached resistance. Let's see if I can make this bigger. Price reached resistance and all of the triggers remain below. Does everybody recognize that as a termination condition? Price reaches resistance, triggers remain below. Price reaches yellow one-to-ones, triggers remain above. So in order for this termination condition to become what we call a strong top or bottom, there must be a reversal. And guys, that usually takes 4 or 5 bars to happen. So it's just no more shorts. When it reverses the market, now it's a strong bottom. This is just no more longs. When it reverses the market, now it's a strong top. Does that make sense, Kenny? And then, Kenny, what you've pointed out, which is pretty awesome, is, guys, you can use patterns beyond the very basic. If I get a loss of momentum from the middle of nowhere, and then I get a second loss of momentum lower, the market's more likely to push down. That's just a pattern. It's not a termination. It's not a strong top. It's nothing more than a pattern that says, man, this loss of momentum was one thing and it bounced off an area, and now I've got an even lower loss of momentum. And if you look on your small chart, Kenny, check it out. 1, 2, 3 divergences in the same price range, kind of confirming that that market wants to go down. Does that help? Awesome. And then let's just look at the trade here. Did you have odds favorable momentum? That's the only thing that you didn't annotate. You had momentum. Nope, you did. You had a clear path. You had an area inside of favorable large triggers, and guess what? It didn't work. Would you take this trade again if it set up, Kenny? Can we agree that this is a trade that wins more than it loses? Can we agree that you had everything that you needed to say, yeah, I've got a high probability trend trade. I love this thing. I'm never going to miss this trade. And if it doesn't want to win, F them. They can have my money because I'm never missing this trade. I would take that loser with you, my friend, every time, because it fits the rules, because you have the advantage. And that's a great example of it. Guys, I want you to see what happens when there gets this indecision, right? When the smalls are up, the large are down, you've had divergences. The S&P has kind of stalled out right around this area. And the triggers aren't wide and angled, and there's no areas inside of it. And man, they're just trying. But this right here tells me it's not a high probability trend trade. When these triggers don't agree, that's enough to keep me out of this indecision and sweating and nail biting and all the things that go with it. So great charts, Kenny. Thank you for sharing those. Let's go through. Let's keep moving on. And guys, if I ever miss a chart or a question, let me know, please. And PC, you're back. That was great timing. PC says termination, reversal, bad top, mid-band holds, everything's going up, 50-50, and made area market slipped 50 to 20. So you took the entry, PC? Where did you enter? Let me see. Bum, 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 bum. So PC, here's my look on it. Good bottom. Termination, midband behaving as a termination. It reverses the market. It gives me odds favorable. I'm on a 50-50. With one divergence, I'm willing to take it. I got it just a little bit late. I came in, opened up the chart a little bit late, got in. I got out at trouble on my first contract, right there at $100, right there at the divergence high. And then from that one, two divergences is an exit condition for me. So I took the exact same trade, PC. I took the exact same trade as you. I just managed to do $90 better. Maybe I had a little better entry. Maybe I had a little quicker exit. But it's the right read. Good job. All right, Paul. Strong bottom. There's momentum, but not the best momentum. And you said, I've got one line out. I haven't reached the area. I've got the perfect entry. Paul, beautiful trade. Guys, see how it's not odds favorable, but it's still strong? The path is clear. The entry is defined, and Paul's able to capitalize all the way up. Absolutely perfect, Paul. Catching them live. I love that. And then Josh, odds favorable, clear path, perfect entry. And you were out at 53.50, right at the fib. Just didn't work. And they were just dancing a little bit. Just dancing. Why did you put yes, loser? It happens. I'd take that one. We took it in class, right? We got stopped out in class. So Josh, you have a range chart here. Can I give you a little quick heads up? Oh, I got you. Oh, yes. I'm like, ah. Just from the range chart. So guys, this is a little advanced for you guys that don't have range charts. What's your momentum say there? Odds freaking favorable, right? Strong. Wait to get on the right side of them. You'll be absolutely floored. And you got to the right side here, maybe a small loser, right? And then you still have everything, and you can wait for that decisive close below. But fighting these very rarely works out for you. When you have that range chart, it very rarely works out for you. And they're still dancing here. Just a little heads up on the range chart, guys. You don't need a range chart to take a high probability trend trade. Josh has been with me a little bit longer, so he's seeing things a little bit more advanced than you guys. And I think that my S&P workspace is corrupted because it keeps crashing. So guys, I apologize. I got to do a little side gig here. And I'm going to delete my S&P workspace, and I'm going to have to build a new one because there is something corrupt in there. So I'm going to pull NinjaTrader back up, and I'm going to get crude oil. And guys, this happens sometimes. One of the things with the digital age is you get corrupt data. When you get corrupt data, it can create problems. So, Josh, I love the trade. It just didn't work out, man. You had every rule met. Everything looked good. Your entry was perfect. Your stop made sense. And it just didn't work out. So you got to learn to trust your rules without a doubt when stuff like that happens. And I'm just going to pull up crude oil so that I have a live chart up. But let's look at Pedro's chart. Pedro says, I know the rules. And Pedro, you took the exact same trade. I mean, everything, and you put your stop in the right spot, and you're in at the right spot, and everything says this is the right trade, Pedro. And I think we know how it turned out. It just didn't work out. It happens sometimes. Even Jen says, guys, this is it. I see momentum waning here. The smalls turned up a little bit. You got out on the second divergence. Beautiful. So Pedro, you're at that level where you are beginning to manage, where you have those set of rules for exit. And I think I even said it in class, is the second higher divergence is an exit condition for me. And Jen says, you know what, Mark? I noticed that the small triggers turned up, that the colors didn't match. And I love this because what Jen is telling me here, Jen is saying, hey, Mark, remember when you were talking about momentum and you said that in order to have the best trigger look ever, that all the colors have to match? And she said, Mark, I know you say the same thing every day, but that one stuck with me. And it told me that there was something going on. When those small triggers rolled up, I knew I didn't have rule number one met technically. And you stayed out of the mess, Jim. And that's kind of cool. Because what it means is that if you keep it simple, it's almost like this protect you blanket rule in the beginning. Um, all right, so Rob, that is not a pivot stop out. You found Wordle playing that? Still out of the mess. Nice job. It's not always the trades you take, Jen. It's the ones that you don't take, right? It's easy to lose a trade. Has anyone ever gone out and just tried to lose a trade? It's effortless. Why is it effortless? It's effortless because you know what you shouldn't be doing. If everything says up and you're like, I'm going to lose the trade, every one of you would go short, right? And if you said, I have to lose a trade real quick, let me trade into a termination conditions. And it's funny because, and this is, guys, this is human psychology right now. If you went tonight on market replay and you said, my goal is to lose as many trades as I could. Has anyone ever done that? I do it in the room sometimes, where I say to myself, you know what? I don't have the perfect trade. Let me go long right here and get run over in front of everybody. Go through on market replay and try to lose trades. And what you will understand is that you really do understand advantages more than you suspect. That you do understand that a clear path is a huge victory. And you do understand that momentum is a giant advantage. Because if you go into it trying to lose, those are exactly the things that you're going to fight, are all the things that make you successful. And then you just have to flip that. So Rob, this is not a pivot stop out. This is one of those divergences which just signifies a loss of momentum. But Rob, are you with me in here? This is a great question because it opens the door for an awesome lesson. One thing that did happen, Rob, and let's go through the whole thing. Notice how that didn't hit a fib. Does everybody, and it doesn't have to be Rob, does everyone see how that didn't make it to the area? So we're going to call that a bad top. Why is it a bad top? Why is it not a strong top? Because it's not coming from a termination condition. And it pushes all the way down to the midband and right by support. And this is where you have to notice the large triggers are more than a bar away. And guys, this is what we call the gap theory. And the gap theory says that if your large triggers are more than a full bar away when you reach an area, the market's likely to continue up and go and close that gap to the triggers. So when I'm talking about the credence that I give this trade, Rob, there's a couple things that I look at. I look at the idea that it's not a good top, which suggests that the market may want to go up more. I look at the idea that the gap theory is in play, so I can at least expect up to here based on patterns. And then right here, when I reach those triggers, I'm going to look and see how the market reacts. I'm going to say, is it going to continue up? Is it not going to continue up? And then right here, Rob, is where there was an opportunity for that 50-50 trade to get you in. You had to manage out of it. So I love this picture. This has been an uptrend. It didn't hit the areas. It pulled back to the mid band. And doesn't that just look like a trend trade? This is a great read, Rob. And it doesn't mean that you're going long from that mid band or from that fib. It means that you're definitely not going short into it. Good stuff, man. Thank you. I hope you got that. And then Pedro. And Pedro, this is pretty awesome. So this is one of those momentum style looks. This is one of those, it blurs the lines between momentum and trend trade. Weak triggers at support. And it was 50-50, and there was no divergence, and it did pull back right to support inside of favorable large triggers. It fits the rules 100%, Pedro. And I love that you've got your stop just below the first trouble or the first target, and I hope that went up for you. That's a great looking trade. And Pedro, this same look is what momentum trades look like. When there's momentum on both charts and it breaks through and snaps back, even if your triggers were a little bit lower in a strong moving market, that would represent a momentum trade. And momentum trades that fail typically turn into trend trades with these. Beautiful trade. And you got both targets. I love that. I love hearing that. Trading with momentum, trading with the trend, right? Going with the direction. Making it easy on yourself. No opinions in that trade. Just super rules. Great job. And then Gerard, let me see what we have here. Why are you on the micro? Just curious. Let's see what we have. You got in at 78.60, which is right about here. Okay. I'm going to give you a little heads up on that might help. You know the smallest way to start is sim. And I know that doesn't make you a millionaire in your first week, but the smallest way to start is sim. Cool. Then if you're in sim, don't waste your time with the micro because the micro is a little more erratic than the big. It really is. So your 13.2 says going up. And I'm going to show you what I mean. So this is right at 740. So at 740, so this is the trade. Do you see how on the large crude oil, and I'll turn this into a micro chart. And I think this is a pretty cool trick. I used to trade micros too. This is how I know this. And I did this for both the S&P as well as crude oil. And what I would do is, Gerard, the large crude oil is going to lead the way, if that makes sense. The large crude oil is gonna lead the way. The large crude oil is where the people are. It's where the money is. Your micro is doing nothing more than following the large crude. So one of the cool things that you can do is on the micro, your trade is divergence off of fib directly into all sorts of just BS, right? You're directly into a termination condition. Even here, you're directly into a termination condition. Your triggers are getting weak. You do have odds favorable, but this is tough. That's a tough look. But one of the cool things, Gerard, is that you can still make an MCL small chart and you can have a large crude oil chart, and what you'll find, and I don't know if that's going to work out, but let's go see it on the MCL, is you can let this chart that leads the way, this chart that has the volume, this chart that has everybody that you need into it, and then you can just sell it. over here on the micro and get that smaller risk that you're looking for. Does that make sense? And the management's the same, but at least this way you've got the big CL moving. And you're making decisions based on the large CL's areas. And I have found in my own personal world that this is easier. Doing the same thing on with the S&P, letting the large ones lead the way. But here, do you see how you're directly into a termination condition? Price reaches resistance and no triggers, right? And you do take a beautiful entry just above the mid band, right there at the triggers. Three divergences says get out. And look what it does off the three divergences. All that nonsense right at the key areas. And then finally the fight ends and they break out. And now you're looking for that pullback here to re-enter. It's a good read, and momentum was there, and the entry was good, and you were very aggressive on the management, which I think is outstanding. Maybe too aggressive. You didn't even let it do anything. And I'm going to give a little management lesson, and I know that you're working on entries right now. But between this entry, Gerard, and your panic-stricken exit here, what changed? What changed on those charts? The large chart's still set up, right? You were bouncing in the direction that you thought it was going to go. Your small chart was still up, and you were in the beginning of a reversal bar going that way. Did anything change in between entry and exit? Or, and there's nothing wrong with this because we've all done it, was it fear? Was it, I'm going to capture 3 ticks and not risk anything because I'm scared to lose? I've done that. When I went live the second time, after getting absolutely annihilated in the markets, Gerard, I would take the perfect entry and make a tick. I was down in commissions. You can't let these 5-1 chart fluctuations scare you. If the large chart says up, if the large chart says strength, that's not a base hit. That's a foul ball, especially on micros, because the micro commissions versus the large chart are about 4 times. And you have to make about 2 ticks, 3 ticks, just to break even on the micros. So from 76 to 78, you were probably net negative 38 cents after commissions. Does that make sense? Base hits are $100, right? That's a base hit. That covers commission, money in the bank. You can still get a cheeseburger. If you're making less than $20 or you consider $20 your goal, well, then you better be doing it on a 10,000 lot and hoping that you can turn that $20 into something. And I'm not encouraging anyone to trade a $10,000 lot. You'd never get filled. But does that make sense, Gerard? So a couple things on this one. One, you're on simulator, brother. Let it go, right? If you're scared to lose simulator money, live money is going to pucker a pleat into your chair that you'll never get out. So get used to taking the entries. Get used to taking losses, right? It doesn't hurt. It's okay. Get used to moving stops. Get used to adjusting targets. Get used to getting out of trouble. And do all this stuff on Sim so that when you do go live, you're like, man, I've seen this 100 times. I have zero fear. And you will get to that point, guys. You will all get to that point. People love to get off Sim quick. It is. It's very much about the emotional. And it's a trust issue is what it is, Gerard. And I know because I've been through it. So if I told you, if I met you on the street and you were a trader, I said, hey, Gerard, guess what? I'm going to show you how you can enter a long trade when the market is going down. Your reaction is like, that's asinine. That's crazy. Who does that? Why would you go up when everything's going down? What if it keeps going down? And that would be a very healthy emotional response. And then I say, well, there's this pattern that if you have momentum and a clear path, on a smaller chart, you're going to be able to recognize this cool little look that continues with this large chart. And you say, wait a minute, well, that kind of makes sense. And then you say, but you know what, Mark? you seem like a Yahoo. You seem like the kind of guy that would lie to children and steal their candy. So let me go back and let me take 100 pictures of this look. Let me see for myself. Let me tell you that I think you're full of crap, Mark. There's that momentum. All right, okay. So that one worked. So maybe it's a fluke. Maybe there were two. I'll try this one. Son of a gun. There it is again, right? And what happens, Gerard, is when you put the work in to learn how to trust the methodology, when you validate and verify that this is a look that wins more than it loses, then the emotional side of it tends to go away, and you really get to a point to where you'll focus on execution rather than the emotional response to the fear of loss. Because all there are ticks in the market, just up and down. That's all it is. And Zorro, I deleted yours. I'm sorry. I went on a tangent there. So Zorro says, with all the momentum, and this is the same one that we saw earlier, right? Little snapback, boom, perfect momentum. Let me get paid. Let me get out at trouble. When trouble breaks, let me get back in with momentum and let me get out at trouble. And Zorro, this is the one. That's your trade. And guys, this is not a high probability trend trade. The second one definitely isn't. But if you spend just a little time focusing on advantages, you'll be amazed at what you see. And then Paul says, here's crude oil, and there's strong triggers, and there's a good area for entry, and let me make some money. And I think it's still going down. If I'm not mistaken, Paul, we are just about to your second target. Look at the momentum, guys. That was my dream last night. That was my thought this morning. Was that if everybody would just focus on momentum, if you just insisted to yourself that momentum is the one thing that I don't want to do without, that momentum is the one spot that I don't want to give up, you would be pretty floored at just how much markets tend to push in the direction. And then once you're so convinced that momentum is outstanding, and guys, you will become convinced that momentum is outstanding, all you got to do is go back and look at it, right? All you have to do is go back and see how many times the market pushed with that momentum, with enough room for you to get paid. Then you start saying to yourself, all right, I believe in momentum. We're going to do it again. Let me go back. This is going to be one picture, and a consolidating market is absolutely beautiful. So Gerard, this goes back to the emotional side of it. And guys, this is almost 2 days. This is over 2 days. There's a pivot stop out. Kenny, there's your lower divergence after a pivot stop out, but that's 3 divergences. That's a termination. There's a termination. There's a termination. There's a termination. There's a termination. It didn't make it. Termination, 50-50 fails. Termination, 50-50 fails. Termination, and it starts it down. So guys, there were 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 areas that stop the market per the rules. 11 areas that stop the market per the rules. If you go back and you continually look at support that stops it, resistance that puts the brakes, right? Support stops. There's that lower divergence that Kenny talked about. Directly into support. Weak triggers, pivot stop out, right into one-to-ones. I'm telling you right now, guys, if you go back 10 days, what you're going to realize is that rule number 2 keeps you out of an awful lot of mess. That rule number 2 gives you the advantage of understanding exactly where the people in charge are likely to react. And that's the part that nobody puts into this. Does everybody remember this picture? Hold on. These are the guys that create momentum. These are the guys that establish trends. These are the guys that react to areas. Does everyone remember that when we talk about it in the very beginning? Guys, if you go back and you see how many times there's reactions at these key areas, you will be absolutely freaking floored at how powerful your software is. And you'll say to yourself, man, weak triggers, I don't need to take a trade. And then you'll just work it out. Guys, this is one of those 50-50 trades from a bad top. One divergence gives you a fighting chance. We'll see if we get a second higher divergence and if they decide to continue up and look for the next key area. We'll find out. Is it making sense? Is it clicking? How are my new folks doing? Malcolm, how you feeling? Let me go through. Who else do I have in here? Hey, Alinsky, good to see you in here. Gerard, how we doing, bud? Tang24 looks like a new name. Kenny's coming back with a vengeance, absolutely killing it. Feeling all right? I'm telling you guys, it takes a little bit. It takes a lot of repetition. And when I tell you that I'm going to give you everything that you need, guys, I try not to give you more than you need. And it is a marathon. It's very much a marathon. My break was at a weird time. I'm going to share a couple things and then we'll look at the live markets. I'm not going to open my S&P chart again because it is corrupt. I'm going to have to rebuild it. So I'll open up gold just for grins. So while that loads, I want to share this with you real quick. And I wrote this after being confronted by a gentleman about rules not being met in this room, about people taking trades that don't fit the rules in this room. And guys, everything is about a foundation. And I teach that foundation every day in the first hour. And I talk about momentum and a clear path. And I talk about areas inside of favorable large triggers. And then the idea is to build that one simple foundation to work on becoming a chart reader. And then from there, growing and compounding and creating more. So for you new users, I blanket with very conservative rules. And I know that I blanket with very conservative rules. And you're not going to be stuck in these very conservative rules for long. Trust me on this. But guys, these very conservative rules, the recognition of advantages, and a solid plan, that KISS plan, it optimizes your chances of success. It just gets you focused on seeing these advantages. It gets you focused on becoming a chart reader. So for the new users, all termination conditions are bad, right? Stop loss on an entry on crude oil on increasing momentum up. Show me a picture, Tang. Show me a picture. Let's rip it apart. Let's look at it. Let's see what happened. I bet you we could get smarter from it. You still can. Your charts are still up, right? Well, hold on. I'm loading here. But your charts are still up? You closed down after the entry? After the exit? Okay, well then I'll tell you what. We'll go to mine and we'll look at it. Because I want to talk through it because I have a feeling I know exactly what happened. And we will talk through it together if you're going to stick around. Guys, I give you this, no terminations or it's horrible, right? No, if you don't have momentum, it sucks. Don't do it. If your areas aren't inside of favorable large triggers, you are destined for failure. And it's the same thing as your parents telling you, don't touch the hot stove. Don't touch the hot stove. We all know that you have to touch the hot stove before you don't do it, right? That's what simulators for. Take these rules, break these rules, and you'll begin to create trust in them. But just like anything, the more you study the simple stuff, guys, the more you're going to see. And as a brand new user, you're going to see people taking trades that don't fit the high probability trend trade. And I want you to know that they're just at a different place than you. Focus on your plan. But what happens is you start to see patterns because you're watching the market repeatedly and you're looking for specific stuff and you start to recognize things. And if you follow the process that yields results, the results seem to follow. And then if you start basic, very simple, you begin to see more and more and question everything. It's imperative that you question everything. If something I say doesn't make sense, call me on it. You're not going to hurt my feelings, I promise. If something that I do doesn't make sense, call me on it. It's okay. So, Tang, you got in right here. And I want to do this for language. What is momentum, ladies and gentlemen? Momentum is smalls outside of the large. That's momentum. There was a pullback. This was your entry. That divergence low represents your first target. Once we hit this divergence low and a second divergence prints, that typically is an exit condition on a 50-50. And if you guys remember, we were watching it, we said that's a bad top. This is a 50-50. Take one shot at it. Second divergence prints. It's all right to exit because that is kind of the beginning of the end typically on these 50-50s. So I don't know where you entered. I don't know where you exited, but that's kind of the rundown on what that trade was. Did you get in somewhere up here? And guys, this is why taking pictures is so important. Being a newbie doesn't excuse you, right? So I'm going to give you everything you need to be able to find it. You went long at 9:10 a.m.? Oh my gosh, we're talking about history. I don't know. What time frame are you in? Are you in Pacific? My 9:10, you're East Coast, so you went long somewhere up here. You went long right here at the pivot stop out off of 1-to-1s with everything up. I could get on board with that. And you were stopped at 98.97. $78.97. Okay, that makes more. I was like, wait a minute, dude, that was a great trade. The market didn't even go there. So you got out somewhere about right here. So you made it from here with everything saying up to here. I like it. So Tang, the only thing I would say is your large chart said don't get out. Take it to the fib. And that's exactly what it did, is I went to the fib, right? From key area to key area. Nice job. But here's what I need you to do, because as good as I am about scrolling back and guessing what you're thinking, I don't know, Malcolm. I wouldn't have. That's why I said I would have held to the fib. That's what my indicator said was going to happen. But he was in at 79.10. He was already up. He was long at 79.10, out at 87. I mean, hell, that's an $800 trade. Pocket it. Go play golf. So Tang, one thing that I need you to do, you can either go through and download it and read this and do it. Come back tomorrow. I'll do a tutorial on it. Get with your salesperson. They'll talk you through it as well. But by taking pictures and dropping them in the room, by telling me what you see, where you see it, why you did it, where you did it, it opens the door for me to help you. It opens the door for me to tell you, man, I see what you did. But if I don't understand your thinking, I can only tell you what I think, right? And if you don't understand your thinking, well, then making something repeatable becomes difficult. And the idea, guys, the most important thing that you can do as a day trader, in my opinion, is do the same darn thing over and over. Take the trades that give a statistical advantage. Be able to repeat the exact same process. The most impressive, profitable day traders that I know, every one of their trades looks exactly the same, because they know that if they take that trade 100 times, even if they lose 30 of them, they're going to win that other 70, which means it's a statistical advantage, which means that successful day traders stop expecting to win every trade. They don't worry about winning every trade. They're not concerned with winning every trade. What they worry about is whether or not they executed their rules properly. So if you're not taking pictures in the beginning, if you're not annotating your charts, if you're not creating an understanding of your rules, giving yourself that visual so that it can be repeatable, then it's going to be more difficult to find that same success consistently in the end. I hope that makes sense to everybody. And when you believe you know what's going to happen, here it is right there. I have odds favorable momentum. I have a clear path. and I have an entry inside of favorable large triggers, this trade has to win. When it doesn't, when it doesn't, you get butt hurt, right? It's crazy, Josh, isn't it? And it's funny because everybody has to learn that on their own. Everybody has to figure that out in their own time. I try to expedite the process for you guys with the pictures, with the spreadsheet and all that. But it hasn't changed, guys. It hasn't changed in 20 years. Post in the room and get feedback. Post in the room and get feedback. Annotate your charts. Understand what you're doing. Look at them. Get feedback. When I started with Nexgen, not as an employee, but rather as someone that was learning the software, my brother wrote the software. His last name is Novak too, and I'm not gonna lie, I felt very entitled to win because I had that working copy of software. I felt like I was destined success. And my brother told me, and he wasn't even as rigorous as me. He said, Mark, do me a favor, write down what it's going to take to get you into a trade. I'm going to show you how easy this is, guys. Mark, write down what it's going to take to get you into the trade. Well, guess what, guys? You don't even have to make it up. Here it is, and here's what it looks like. And he said, I need you to do me a favor, Mark. I need you to go take 10 pictures of a long, 10 pictures of a short with your rules being met. And he said, Mark, there's one other thing I need you to do. I need you to post it in the room so that I can give you feedback. So that if you are making a mistake, you don't just keep making the same mistake. If you make a mistake, we can talk about it and we can fix it together. And then for those of you that don't know my whole story, when I started with Nexgen and I got the software, and I'm going to show you my favorite picture because it's pretty real. I thought, man, this is going to be fun, and I should be rich this time next year. I should be a millionaire this time next year. And then I realized that it wasn't as easy as I thought. So I started trying to get lucky on Simulator. I tried jumping in, no rules. All I wanted was to make money because I thought money was a reflection of my long-term success. And I really had absolutely no idea what I was doing, guys. And this is where I refused to take pictures because I'm so damn smart, I'm going to remember it anyway. And I refused to put anything in the spreadsheet. Well, I didn't even have pictures to put in it. But the worst thing that I did, guys, is even though there was this amazing classroom with the opportunity for me to get feedback on everything that I did from the creator of the software, from someone that reads indicators better than anyone that I've ever met, I chose not to do it because, and here we go, full admission, guys, feel free to make fun of me for this. I was scared of what the other 39 people in the room would think of me if I made a mistake. I was scared that they would see that my last name was Novak and I wasn't perfect at this in my first week of doing it. And I didn't do it. I didn't ask for help. And then right here, I went live because I got lucky on Simulator. And this is the Mark Novak story. In 21 trades over the course of about 2 hours, I blew out 5 grand. One day, guys, 5 grand. I had to tell my wife that night, hey, you know that trading account that I had? It's gone. And I have absolutely no freaking idea why. And I was humbly relegated to the I don't know shit stage. Pardon my French if that is offensive. Um, and down here is where you're going to make a decision. Down here is where you're either going to say, I quit, this sucks, I'm never going to do it. Or down here is where you make the decision, you know what? I'm going to follow the path that's been proven, the path that yields results, the path that got everybody that I see in the room successful where they wanted to be. And guys, this is the path that I got on. And I'm up here. And it took a while. Yeah. And if you know the women that are married to Novak men, they are very, very patient ladies. Thank goodness. But guys, I say all of this to tell you, not to be preachy or anything like that. I say all this to tell you that there's an easy way and there's a hard way. And I've done it the hard way. And even after I did it the hard way, I still fought it for a little bit. And when I finally just started taking pictures and started posting in the room, Guys, it was amazing because what I realized, and I'll tell you, and this was pretty cool for me, is what I realized is that while I understood the rules, I didn't understand momentum well enough. And I definitely didn't understand termination conditions the way I thought that I did. And my entries were always early because I was afraid of missing out. And I started posting in the room, and my brother started saying, "Hey, check this out. But let's look at this, right?" My brother started saying, let me pull up somebody's picture. "Hey, I know that you got in on the reversal bar, but what we're doing is we're waiting for the areas. So Mark, focus on this a little bit." And he said, "I know that you wanted to get long into the areas, but see how effective it can be when you trade from the areas instead of to them." And what happened, guys, is I got to the point to where I started recognizing advantages, and I started speaking to myself in terms of advantages, and I was able to start making money. And I say that because all of you have to go through your own stuff, right? Everybody has to fight their own demons. Paul took this trade and got paid. Great job. And in gold, what do you guys think? The triggers are down, the path is clear, but I don't have any areas inside of favorable large triggers. Do you guys see how the little rule number 3 keeps me from getting run over at the mid-band? And this is important that you guys see this because in the beginning, you're more concerned about missing the trade. Once you get run over a few times, you start to focus on the statistical advantage. If you took that short in gold and you did get run over, well, then we need to talk about it, right? Let's fix it. Let's work together and get it taken care of. That's it. I'm out of smart stuff. So it's up to you guys. What do you want to talk about? I'm going to tell you right now that I'm working on video series. I'm going to put together a little something all about NinjaTrader, all the basics for new users. I'm going to try to make short little snippet videos of each advantage. I'm going to try to make tiny little snippet videos about the perfect high probability trend trade, about all the different stuff, guys. I'm going to try and make a series of videos that are 2 to 3 minutes that focus on the pieces that create the whole, because I think that is where the success comes from for you guys. Um, Worrying about a high probability trend trade as a brand new user is overwhelming. Taking 2 days and focusing on nothing more than momentum and what happens when I have it, it builds trust. And then focusing on a clear path, it builds trust. And focusing on the entry, it builds trust. And by incorporating the opposite of the rules being met, what it means is that I can come and I can look at a moment's notice and see if the 3 individual pieces are there. And if they're not, then I know that I don't have a high probability trend trade. And I think that's what pays dividends for people. When you look at your chart and you can say to yourself with no uncertainty that you do or do not have momentum, that you do or do not have a clear path. And then your entry areas will change over and over. And I had the best little message over the weekend. Hey, Mark, is momentum important? Is momentum like a must-have? And I'm going to tell you guys, if you're a high probability trend trader, then momentum is an absolute must-have. If you're a momentum trader, then momentum is an absolute must-have. But the flip side is if you're looking for the first shot from a top or a bottom, like one of those HVA trades, well, then the momentum might not be there. So you've got to know what kind of trades you're taking so you know whether or not that momentum is a key factor in it. And you have to know what kind of trade you're taking so you know how it needs to be managed. So, guys, what do you want to talk about? And Paul, great trade, by the way. What would you guys like to talk about now? We've got about 20 minutes. I'm more than happy to shut down now if that's what we need to do. But I'd rather make some people just a wee bit smarter. I would rather talk about one of the concepts. Cam with the cool Nexgen logo. Anything you want to talk about? Who's this Chris Novak fella? Another one of those entitled Novak people. Gino, how's your trading going? Jen, how you doing today? Nobody? Crickets? Cool. I'm going to mute my microphones. I'm going to go ahead